All right, a couple of interesting things going on out there. Let me mute this. Pretty interesting to be aware of. All right. All right, so since we last spoke, we were talking about the whole OPEX gamma roll-off opens up the window for volatility that everyone's been talking about, right? We've talked about, almost every monthly expiration. We've discussed that on this webinar for a while now, and it really got out into the mainstream after the last expiration, right? Bloomberg had a couple articles on it, and you see a lot more people talking about it than usual. So we figured, if you remember the discussion we had, we figured that they would try to front run. If there was going to be any weakness, they try to front run and squeeze it in before OPEX week, right? Because if you remember, for those of you who may be new to the webinar, what usually happens is come the week of expiration, midweek, right? It used to wait till Friday and the Monday after expiration. But as this has been in the works and working, it's gotten earlier and earlier because obviously machines, algos, programs front run it, right? So what usually happens is you get a grind higher into OPEX week. A lot of times we get ready probably into a Wednesday. We'd be a little more careful because things can get a little bumpy going into Thursday, Friday, that following Monday. But this week, because of so many eyeballs on it, right? So many players positioning for it, paying attention to it. We kind of figured it'd get front run at some sort of fashion. And it did, okay? The weakness, we started to roll over last week. And what's interesting now is we kind of, while everybody's waiting for this market possibly to unravel here, every time we go and we test these lows, sellers had gotten a little bit tired, right? And there hasn't been much of any weakness this week. We went nowhere, basically. Okay, so the week of OPEX, there was no weakness. We've kind of just been chopping around with a little volatility. Okay, so that takes care of the whole gamma OPEX thing. It kind of, in my opinion, sort of played out. It's been priced in, and now what comes next? Right, the selling was last week. They front ran it, right? Kind of what we expected with so many people paying attention to it. So now what we've been trying to get a gauge on, and it's really interesting because what you have now is you have the Fed next week, right? And what usually happens in front of these big binary events, you get a lot of players who hedge, put on protection, right? They always wait till the last minute, and it's a nothing burger, right? No big reaction out of the Fed one way or the other. And those hedges and protection needs to be unwound. And it's an exasperated squeeze to the upside, right? That on top of dip buying coming in, flows coming in, all the cash on the sidelines, blah, blah, blah. Okay. So what I've been trying to keep an eye on here, we're trying to see if we can reel in enough hedging and protection to possibly position for that again ahead of time. Okay. Because the logic is if players are all lathered up in protection, right? If everybody's got hedges on, the likelihood is no matter what news comes out of that event, it's already priced in, kind of like the whole rate situation we spent a lot of time talking on, right? Everybody positioned for higher rates. It made sense. It was the logical choice. Somehow, some way, rates kicked it in reverse. So, but what we're seeing here, okay, we're not seeing with the volatility and all, okay, we're not seeing as much protection as we would like. Okay, we're seeing a lot of short-term tactical protection, right? Hence why we had a tactical bullish sentiment signal into yesterday, right? We squeezed. Prior to that, we had another short-term indicator we follow, the anti-VIX, we call it. There was a bullish signal there. We squeezed, right? So there's been hedging and protecting over the extreme short term. But stuff like the put to call and net put delta, some of the more positional readings we follow, it hasn't been quite there yet. As a matter of fact, in regards to SPX hedging, which has been a constant throughout a lot of this rally, right? We've been talking about players getting long individual names and hedging with SPX puts, okay? So it's kind of put a floor in this market. What's been going on now is we're not seeing that hedging take place in SPX yet. Okay. That doesn't necessarily mean we have to roll over and sell off violently. Okay. But it's hard to really get bullish, right? Again, based off the stuff we like to look at, it's hard to get bullish, even though we got a pullback here, without that aggressive hedging, especially when there's an event like the Fed. Okay. Now, one thing I was thinking about though, and it does make sense, me and the guys were talking about, maybe they're already hedged. You know, maybe it's possible from all the hedging we've been seeing, players are already hedged. And that's why we're not seeing that scramble, that grab for protection we usually see at the first sign of the markets, you know, experiencing some volatility. And you can see like this, again, this doesn't tell the whole story. And that's the problem with put the calls. They're basically just volume indicators or ratios, I should say, right? They don't tell you of the put and call volume, what was sold, what was bought, right? So there's a chance, even though you have elevated put volume, there could be put sellers in SPX, which we see a lot of. And that's what's been the case, okay? So here you could see this bottom one's breadth, right? But you can see we kind of, just been lollygagging around, right? No spike going into this recent pull, right? And as a matter of fact, earlier this morning, you could probably see it better on an intraday. Okay, earlier this morning, it was a bit concerning because as the market was selling early on, you had the complete opposite of what we were looking for or what we were expecting. You had players not looking to protect at all. Okay, and then eventually you could see, right, it lifted, and as the market was selling off, they had a change of heart, So they've been stubborn, and you can't blame them. We talked about this. Every single dip, right? Every little dip has been a fantastic entry on the long side. Any money you've been pouring into hedges and protection have been you might as well just light it on fire in this rally, right? And we talked about eventually this market is going to force the hands of these hedgers and get them to that point where they feel, listen, why are we pissing all this money away hedging? They've actually been net losers off recent hedging, right? Because this is something else we spend a lot of time talking about. They have been positioned on the long side in reopening cyclical type names, okay? Making a bet that the economy was going to reopen and we were going to get a roaring 20s, style, right, of economic numbers and earnings. So they wanted to have heavy exposure to cyclicals. Anything economically sensitive, they wanted to be long of. And what they would do to protect the downside, because the market's been stretched, they would buy S&P 500 puts to protect those cyclical longs. And what happened? The market's just been grinding higher, lighting those hedges on fire. They become worthless, so they lose the money there. And the reopening names have been a disaster. It's like basically the market has been in correction underneath the hood in a lot of these things. You know what I mean? So eventually they're going to get to that point one way or another where they feel these hedges are a complete waste of money. I'm not saying we're there yet, right? Because we're just starting to see for the first time some of this behavior. But that's what's the most interesting thing that I'm seeing right now, is that they've been stubborn a lot more than usual, and not have been as aggressive in putting on that protection and that hedging yet. Okay. Now you have the Fed next week. We could very easily see that change as the Fed meeting gets closer, right? We could see in the matter of a day or two where at the last minute again, players scramble to put on hedges. All right. So it's just something I got my eye on here. But again, the main point for me is it's hard to get bullish, uber bullish on the indices without seeing that, even though we're off a pull. It's difficult. Okay, because that's been the floor, in my opinion. That's what's propped this market up, is that every time the market looks a little shaky, players get nervous and they put on hedges and protection. All right. So that's the negative aspect of what's been going on in the market in regards to the indices, right? And what we're not seeing, what we wanted to see. The good has been something else we've talked about. Okay, probably maybe 3 weeks now? The underbelly of the market. Okay, and a lot of people get confused when I say underbelly for some reason. I do use the word a lot. I'm talking about not the widely held names, not the names everyone's paying attention to, not the high beta names that would move those indexes, right? The mid-tier, mid-cap, small-cap names that are under the radar in a sense, okay? Some could be more speculative. Some are names that just came public not too long ago, okay? But they're not, in other words, if you see buying in these names, it's not always going to translate in to the S&P 500 or NASDAQ being higher, okay? You could see all these names, we could see call buying all over the place and them all trading higher. And a lot of times the indexes are down or flat. Okay, so that's what I mean by underbelly. The action there has been really impressive. Okay, and at least the last 3 weeks, I think it's really become more noteworthy over the past 3 weeks. It started even before that. We started to see selective buying in names we would talk about, the U of the world, the Snow of the world, those type of things. But it's really been a focal point. Like those of you who are in the Steamroom and on private Twitter know exactly what I'm talking about, because that's where all the aggressive activity has been, all of it. Okay, like today, and for good reason. There's no edge, okay, for any real buyer, right? That's what we're looking for. I mean, there's a ton of options flow every day out there. Okay, 99% of the flow means nothing. It's just flow. Okay, we're looking for stuff that we can possibly find an edge in, that somebody has or sees something in a name that you and I and everybody else maybe don't notice. They're just starting to take a position. Okay. That's not going to happen in Apple. Okay. It's not going to happen in Google. You know, it's not going to happen in a TJX that saw some real nice size buying come in today. December calls, even though it's off a little pull. It's not going to happen. These names are so effing crowded. You understand? These names have been going up forever, it seems. There's been call buying out the ass. Okay. Eventually, you have no edge in these names anymore. Okay. Because what happens is, how do we know the size that's coming into, for example, TJX today? Okay. How do we know it has nothing to do with the prior buying over the last 6-7 months that's come into the name? You know what I mean? The stock has been doing nothing but go up, right? The stock has been a beast. Every dip, this thing gets bought. Okay. How do we know this is fresh money coming in to start a position all the way up here? We don't. Now, again, like we always talk about, if the flow is aggressive enough to where it creates some momentum, maybe you get a trade out of it, right? Over the short term. That's fine. But there's no edge in this name anymore until it goes into hibernation, right? The flow goes dead as well as the price action. And some of those positions in open interest go poof and expire worthless. Okay, because they just keep rolling and rolling and rolling. And they don't care when these things eventually go poof, because they've been rolling the whole entire trend. You know what I mean? The whole way. And we see it. There's so many names like this from the COVID lows. There are so many names that, it really takes a huge chunk of the market out of the equation. And I know a lot of people like to trade these names, and that's fine. Okay. You can look to trade them. And that's why we say a lot of times off pullbacks. But you gotta understand, there's not the edge that you would like off sweeper activity in this name, and if you think of it logically, okay, let's even take like an Apple, because I know a lot of people are just love to play this name no matter where it is, right? So, like, let's say you see Apple flow here, right? Goes to new highs. You see Apple flow here. 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 Where is the edge? You understand what I'm saying? Where is the edge off that Apple flow anymore? How do we know that which batch of buying is the goods, right? And not just rolling or anything like that. You don't. It's impossible. And again, if you think of it logically, we talk about like smart money. There's no smart money who's going to buy and build a position in Apple, let's say, off this pullback during this consolidation, and then just keep buying it and buy it here. Okay, then buy it into these highs, right? It doesn't make sense. Right? So that's why, right now, and the cleanest action, the most aggressive, fresh activity has been in underbelly names that have been in hibernation. A lot of these things, if they were around back in February, really took it on the chin, right? The flow dried up completely. Nobody had an interest in these names anymore throughout the summer. And now some of them are starting to see action again, right? Some names just came public, right? We talk about, a lot of us, there's a good chunk of us that really like those type of names, like an S, right? Like names like that. Oh, there we go. MTTR of recent, right? That never saw any sweeper activity before. You know what I mean? These names never saw buying before. They didn't even exist 6 months ago. So we know that if there's aggressive call buying coming into these names, especially over the course of days, this somebody has an interest in it, a real interest. They're not rolling an existing position. There's no rolling, there's no position to roll. You understand? So that's the difference right now, of what we face in regards to, getting an edge out of the flow. And the cleanest action by default is going to be in these type of names. Even like we talk about some of the commodity names, right, that have been incredible. Like after these things explode, like what do we do with this now? What are you going to do with this? Right? There's a good chance you're going to see CCJ action, more action. Are you going to treat CCJ buying up here the same way you would treat it down here? Doesn't make any sense. You know what I mean? So I think that's going forward. The whole rant has a bottom line. The bottom line is I think that's where our focus and our attention should be, is to some of the newer stuff, some of the newer names that they're buying. And there are going to be times where things get quiet and go dead because they can't find anything new to buy. But that's just the market we're in right now. We have no choice. A lot of things have exploded. Interestingly enough, the growth and the underbelly portion of the market was one of the first groups to get hit and go into a correction. And it's interesting that some of these names, right, in that group are seeing some of the better action again. Okay. And the beauty of it is too, a lot of these names, okay, because they're virgins. They're virgins. A lot of these names, you don't even need them to get tattooed to see a decent move. You could see some nibbling startup in a name, and if it's a name you like, you know the name, you're familiar with the name, you've been looking at the technicals, or the business, and like a lot of you do, that's an edge right there. So I think that's where we're at. I think a lot of people are trying to still, look at the same stuff and find an edge, and they've been running into some trouble. And I don't think that's going away. I just don't think it's going to get any easier in these things. One or two things are going to happen. Either you're going to get that correction and you're going to get that flush in these things, or, they're just going to be choppier, and kind of what we may see even in the indices, in the indexes. Maybe there's no dramatic move from here. Maybe it's just a lot of chop. You can trade it, right? Like we can find entries off short-term bullish sentiment signals and trade it. But, to just be comfortable, latch on, hold on, and think it just goes up because it's been going up, it might not be the case. It might not be the case. Yeah, and that's the thing, right, Krishna? Like the metals, I get the allure. They were seeing some real nice buying, but same thing there. Like Alcoa, was still seeing up to even yesterday, seeing buying. And I like the order flow there. I'm impressed by it, but I also got to take into account, this thing's been rallying hardcore. So you at least, you got to at least wait for something like that before you get excited again, in my opinion. But this is not Apple. Still, this is not Apple. You're talking about, a name that any uptick, everybody and their mother owns. Like, look at this thing. Look at this thing. So the point I'm trying to make is this. I don't care who you are. You don't have an edge in this name anymore. No matter what, not just flow. You don't have an edge in this name. What makes you think you can have an edge in this name? You know, a lot of these things, this is the scary part of the market, right? They're crowded. Exactly. Never sell. And that's the thing. That's the thing, Joe. You know, it's that attitude that you think you could just buy it off any sweep and make money off it. And you're going to learn quickly that that's not the case, let alone trying to trade, you know, weeklies and bi-weeklies off any sweep and trying to time every tick in these things, you know? I mean, there's no edge in that. There's no edge in that. Yeah, I'm talking about swinging. I'm talking about swinging, you know, because, you know, my Ani, you know how I feel. Like with weakness, you literally off a pole, right? You can buy anything. I don't care how long or crowded it is off some sweeper activity and try to trade it. You know what I mean? But you just gotta be a lot more selective and pick your spots, even for just trades in these things. Because when the crowd wants to get out, you know, the crowd's gonna get out. And it just gets tougher anyway. Forget that comment, because that's an asinine comment I just made, the crowd getting out. Because that's the beauty of options. The worst that can happen is they go to zero. So you don't worry about that when you're playing options. But it gets difficult. You know what I mean? It gets difficult. Like every time I get worried when I see easy money in these things. You know what I mean? Because you know it's reeling everybody in. It's reeling everybody in. Yeah, and listen, and you talk to anybody, okay? Anybody who wants to be honest, and they'll be the first to tell you that it's been tough, right? There's been pockets where you can make decent money in these things, but if that's all you trade, you know, are these things, you know, there's some tough times there where you're going to lose everything you made. So that's what I'm talking about. And you're right of you to clear that up. I'm not talking about trades, right? I'm talking about swing trades, positions. You know, there's no edge in this thing in a lot of these things anymore. Trades, you can date trade anything, right? So and the edge of the flow right now is in the underbelly, you know, the underbelly. And I think even if you want to be even more selective, which will cost you money, right? Because a lot of these more speculative names have been insane, some of the moves in these things. But if you really want to be more selective for swings or positions and stuff like that, you know, look for real companies. You know what I'm saying? You don't have to buy one of the 600 EV stocks out there, right? There's a gazillion of them. You can look for, you know, some of these growth names that you guys know what I'm talking about. A lot of you guys like those names. You know what I mean? A lot of you guys like those names. Yeah, but see, like, look, Brett, okay? And this is just a good example, right? Like Tesla looks okay, right? It's been quiet, it looks good. But you see, like, even Kathy Wood is taking some profit in Tesla. She loves the stock more than any one of us could ever like Tesla. You know, but it's not new. It's not a tough own Tesla right now. You know what I'm saying? There's definitely longs in Tesla. You're not finding any edge off Tesla. Can you trade Tesla off sweeper activity when the stock is selling off and they come in, boom, 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 boom? Of course, you can get a great trade. You know, you can get a great trade. But outside of that, there's no, you know what I mean? There's no real edge in the name anymore, in my opinion. Again, in my opinion. That's my opinion. Where I think, you know, some of the other names she owns, you see the right flow. I think there's an edge in those names. You know? How is my trade? Oh, what? I mean, you're talking about night and day. I don't hold anything anymore. You know what I mean? I don't hold anything anymore. That's the difference. I don't hold the thing anymore. I'm quick on the trigger and I sell everything at the first shot I get. Where last year, for me anyway, I would try to milk, things as much as I can. Like, just to give you an example so you know what I'm talking about with Tesla, right? If Tesla gets hit, okay, if Tesla pulls from here, like, and you see sweeper activity with it, I think that's where you have an opportunity in Tesla. Not where, oh, Tesla looks good, look, it's coming. You know what I mean? You know that there are players filing into this thing. And if they want, they can slip them right out and they'll all be puking up and somebody will get a great entry. So that's what you gotta wait for in Tesla. And maybe, it's possible it doesn't happen. It's possible you may miss the upside move in it if you really like it that much. But again, I'm talking about from my point of view in what I do, right? Sweeper activity, that sort of thing. That's the only edge I see in like a Tesla. I just don't see it, when they're sweeping into green. There's no edge there. Not that it's going to go down or up. I have no idea. There's no edge off that action. None whatsoever. I think some of the other names. By the way, a couple of the names you guys were interested in. This is a Kathy name, right? PLTR. Right? And you see, like, it was a difficult own. It was a difficult buy. But if you paid attention to the consistent flow there and bought the weakness, right? Played it the right way. Again, it's a slow, painless mover, but in a market that's been tricky, I mean, who's exactly. But if you guys like the high risk, high reward swings, like we spoke about on the last webinar, remember? Like you got to look for the names that, and a lot of you guys do the homework. So that's what you got to look for. You got to look for the names that you kind of like the business. There's growth there. You know what I mean? It's real. There's some numbers there. It's not just a story. And you see some sweeper activity. Then the toughest part, in my opinion, is holding on to it long enough. That's the most difficult thing. But that's where the big moves happen. Right. Good point, Joe. And make sure it's not Chinese, whatever you do. Make sure it's got no exposure to China. Forget Chinese. No exposure. None whatsoever. So that's, in my opinion, and that's what, like, I remember Tree saying on the webinar a couple of weeks ago, like, you sound a little more bullish. And it's not because I'm bullish on the actual market itself or the S&P 500. I feel a little better because there's some new names that are getting attention again. You know what I mean? It's not the same shit over and over and over again. Not the same. That's the tough part for me, Eric, is, do I hold for a longer time frame? The only thing holding me back is a correction, or do I pay attention on a stock by stock, sector basis? And that's what makes things tricky for me. That's what makes things tricky for me, because I don't know if the market does go into some sort of correction. The chances are a lot of these things are going to get hit with it. If Sharpies got long for a swing, yeah, I would get long for a swing. Yeah. Yep. So the main thing I've been avoiding recently, and this, I've been more tactical probably since, I would say, March. All right. Since March, I've been a lot more tactical. The biggest difference is that anything I've been holding, I've been primarily trading equity as opposed to options. You understand? That's been the biggest difference for me, because I can be more nimble. Okay. Like, for example, this market we're in, I don't think it's a market you need to be in all cash. Obviously, I wouldn't be talking about names like we've been talking about, but I think it's a market that you really got to concentrate on limiting your downside. You know what I mean? This is not the market to take hickeys in. I don't think the upside is worth it. You understand that? That's the main thing. So if you can either via protection or hedging or stop losses on the equity, if you can manage your money properly and size accordingly, I think this market, without a doubt, is worth playing. I mean, you see some of the moves out there. I just, for some of you who just solely play options and, really dive in, right? There's no real money management, or there's no toning it down, sizing down for some of you, right? You can get lumped up off just a little sideways action. You understand what I'm saying? And that's more luck than anything else. So you're gonna take a hit, you're gonna get walloped off a little rough patch, and that shouldn't happen. You can't let that happen in this game. You know what I mean? So in simple English, and this is how I would approach it, option, stock, whatever it is, if you can size down a bit and just make sure you have your downside protected, okay? Or that may mean, like we were talking about, sizing down and your stop loss is 0 on the calls, right? That's your stop loss, your premium. Whatever you're putting in is your stop loss, okay? That's your risk. You could take that route as well. You're just looking for bigger winners if you're taking that approach. You understand? So you're not looking for the TJX bounce off the sweeper activity. You know what I mean? You're looking for something that you think you can get paid on because you're risking your whole premium, right? Like a UPST, or what's the other one you guys have been trading? The no, even crazier than Bill recently, the cash for the hottest stock out there right now, Affirm, right? Right? Or this one. What about this one? Nobody talks about this one. ASAN, INTR, right? So not IN, what is it? I know what symbol you're talking about, Jim. I got the symbol today. INRT, is that it? That's it. No. What's going on? IRNT. Jesus Christ. So you got the stupid names that are catching action and going bananas, and you got real stuff that's catching action. So you're not always going to catch these type of things when you're looking for them anyway, but you're looking for something that can move, right? You're looking for something that can move if you're risking your whole premium. Me too. I'm dyslexic every day, so don't worry about it. So, and I think, again, I feel like this, from what we've been seeing in this market, I feel like this is a market you can do it in. A month ago, right, or a little over a month ago, you couldn't do it. You couldn't do it in these names. You would have to play some of the larger names and catch them at the right spot. Forget Chinese. There's no reason to look at these China plays. I'm being honest. And honestly, they're probably the biggest contrarian play out there right now. But why though? Why? Yeah, Baba. I didn't like Baba when China was bullish. I didn't like Baba. That thing was a disaster. And you're dodging landmines in China. China is the root of all the problems out there right now. Forget the Delta variant here. China has been the root of all the issues here. this with cyclicals and stuff like that. You know what I mean? So there are opportunities out there. It's just you got to get the blinders off, in my opinion. You know what I mean? You gotta put a little work into it. You know, pay attention to what other flow is out there instead of their real estate market's tanking. Their economies in literally in shambles. You know, in shambles. All right. So as far as the market's concerned, though, here's what we got. We got actually the anti-VIX that we pay attention to here didn't close that bad. All right. So if you were around today, I mentioned that, we were in the same situation as yesterday, right? We started to creep up. That was the close yesterday. We got a nice rinse this morning. And then we were there, and then we got a nice rinse into the close. So not too bad, not too bad. So we don't necessarily have to wait for weakness tomorrow morning. We can keep our eyes peeled and look for opportunities. But again, I would try to focus on the underbelly. I know some of you, I haven't played too many of them, but a lot of you have been playing some of these SPAC names. I caught a couple of nice ones. I played that. It's not that symbol anymore. That SOAC, stuff like that. But these things, it changed symbols, right? These things are, we're dead and buried. RSI, that had a nice move, right? Look at that. That's a nice move. Fuse, Jay, right? This thing was playing dead. Look. Yeah. And see that's the action. That's the edge, as you know, Jay. That's the edge out of the flow, right? This thing is a dead heartbeat. Doesn't have a pulse. All of a sudden you got some aggressive sweeper activity coming in. You're looking for a move now. You're looking for some sort of pop. It should happen. There's another one too that's been catching some clever action here and there. I think Pablo is it the one Pablo likes? ACIC. Is that it? Yeah, this is it. I don't know what the hell they do these things. Anybody know what these things do? I don't even know what these things do. Oh my God, I can't. Look at this. Look at this. Right, OPED. So if you want to, roll the dice a little bit, you got some of these things that are popping, right? And don't expect big winners out of every single one, but they've been rolling. This thing is, you couldn't ask for a better start out of this thing, MTTR. You really couldn't. Yeah, they go up and they go down, but that's the whole point to what you're looking to do, right? You buy them when they're dead, and when they pop, you look to get out of them. That's what you do. Sometimes you get lucky and they pop bigly. Twitter, I like the spot there too on Twitter. Okay. The only thing with any of this flow, there was another name today that, AMD, look at a nine, but we don't know. You got September expiration, there's September open interest in Twitter. So it could be replacing that. You understand? So what I'm getting at, it may not be fresh, brand new buying. You don't know until next week. But, considering the spot, LVS, that was the other one, LVS. Considering the spot, if you like the name, it's worth a shot. Why not? It's worth a shot. LVS is another one. It caught like a $3 million sweep today, right? But you guys know LVS, you know how much call buying went up in flames in this name? I almost feel bad for them. You know, there's a lot of bulls that just were buying these names for a bet on reopening, not thinking that China was going to shit the house down, right? Like LVS caught some big action too. It catches big action. Wynn didn't catch really much of any action, but that's just as bad. But like Trey was saying, these are the better names to try to buy are these. Caesars. This catches big flow. These catch big flow. You know, they don't have China exposure. That's why. But yeah, LVS. Mar caught some action. That's a reopening name that's been acting better. You know, are you in it, Jamie, or you're looking to buy it? It just, you know, if this is stuck in this, right? That's the problem. You know, so kind of like Twitter. You catch a move like down here and it catches some action. You like the name. You want to, you know, you want to take a shot. You got a better shot there. But you got to try to buy them when they're down. Again, it's just, to me, you know, it's not the same. You know, you had a lot of size come into this thing. You had it's not the same as some of the newer names like that MTTR or a Bill or a U or a Snow. You know what I mean? These type of names. Like, you can't buy Snow here anyway. You got to wait for a dip now, but you guys know what I'm talking about. You know, I'm just giving an example of the names. You understand this? Any action, this thing just went public anyway over here. Whatever action that took place over here, poof, gone. There's no more rolling. It's done, right? So as this thing catches action on dips here, you know it's legit. I'm not saying it's an easier trade, but if you like the name, you know it's legit. Coin, without a doubt, right? And Coin hasn't been good at all. But like, if you see buying come into Coin here, right? Tomorrow, Jim, if you see some like aggressive call buying coming into Coin, whether it works out or not is irrelevant. You know it's legitimate buying. You know, that's my point. You know it's legitimate buying. All right, if it catches aggressive action here and you like the name, this is what you should be looking at. A D-Dog's a beast. I mean, now, you know, this is a little cooked. This thing's an animal. But there were opportunities in D-Dog, right? You guys know, caught some real nice sweeper activity. Net, that's another beast. You know, so there are a lot of these growthy names. And, you know, too, I think we're going to start seeing more cyclical type names too, but I think they're just going to be more underbelly type names. You understand? I think it's going to be more underbelly type names we start to see. I'm hoping, knock on wood, I'm hoping, right? Every time I have a tendency to jinx it. You know, that's why I don't like talking about it too much. But, you know, we've been seeing some nice action in names. Ford, that was up today, right? Yeah, that's a nice spot, though. What's GM? Let's see GM. Wow, these things corrected nice, huh? These corrected nice. You know, so that's what it like. You guys, you remember how much action came into this? That's the problem. You know, you guys, do you remember the General Motors sweeps on the way up here? My God, this thing got annihilated. You know, so it's going to be really difficult to know what buying's clean in this name. Yeah, every day, Matt. Every day. Every single day. Got lit up, $1 million sweeps. Insane. I never seen General Motors catch action like that. Never in my life. It was insane. Roku, I haven't looked at it. Let's see. Roku. I know it was pulling back off earnings, right? Wow. That really got, that's the second, that's the third niner. My God. I didn't realize that. Yep. But should probably find the bottom here, right? Again, I don't know. Were the earnings that bad? You know, I didn't really pay attention to the details of the earnings, but that's a nice wash. What about you guys usually do your homework with underbelly plays? Anybody got any sexy under the radar type names? Not Reddit speculative names. You know, like we're talking about, like SMT. Oh, Ping. We would wait, is this Chinese? I think this is Chinese. Is it Chinese? Anybody know? Might be Chinese. I'm not sure if this is Chinese, but if it's not, yeah. If it's not, no? Oh, it's not. All right, so that's definitely a candidate. This was a name I think they bought Leaps. Didn't they buy Leaps in this name, if I'm not mistaken? Like far out. Cybersecurity, I think this is it. They bought like with a lot of time, if I'm not mistaken. Deep in the money Leap. Yeah. I remember this. Cybersecurity? Why has this thing been acting so poorly? With like, look at S. This thing caught fire. December 20 calls next year, Matt saying in the ping. So this is the one. And it's not Chinese, you guys are saying, right? Yeah, definitely keep an eye on this then. Definitely. Yeah, Owl had that crazy action. I still have no idea what they do. Owl. Anybody know what they do? Still no idea. And I don't own any here, of course. What about this guy, Fifi? This had some action down here too, right? They canceled some. Why do you list Expedia? Expedia. Oh, why didn't I? Because it rolled. Expedia catches size. But if you remember, they were buying size all the way here, like most of the other reopening names. Remember? And they've been rolling down and out. So you got a better price here. But again, this is another name I like. You might need to be patient. Owl is banking. Yeah. Oh, Owl is in a SPAC? I thought it was a SPAC. Trip two. Trying to find a bottom here, but you're probably going to need to be patient. You know what's the best play? If these are going to work, right? This is where we're at right now. If these are going to work, exactly, then this is going to work. You know, then this will go bananas if they work. So, but look at booking's actually been hanging in there, the best of them all. But well, let's see if this is a slowdown thing. You know what I mean? And there's more to go. We got a couple things we got to keep an eye on. These type of names, these cyclicals, are going to have tough time. That's why, again, those underbelly growth names are the way to go. Dash. Jesus Christ. Yeah, GDRX too, right? GDRX looks decent. And the other one that had some buying further out has been lagging significantly. Maybe you get a pop down here, AMWL. I don't know. This company could be a piece of garbage for all I know. I have no idea. OSTK caught a sweep today. Definitely a decent spot. Nothing huge, but caught a sweep. SEMO, that's a semi, right? That's a good looking stock. And the semis too are interesting, right? Texas Instruments had some buying. Was that yesterday or the day before? LRCX caught a bet today. Damn, that's not a bad spot either. Yeah, Cat caught some September action. They're playing a bounce there. September for tomorrow. AMD, that I was referring to that earlier. I like the spot there, Ani, for a trade anyway. But the action could roll. That's the problem. UMC, that caught a bucket of action. A bucket of action, this UMC. SMH. I mean, SMH has been, I wanted to show you guys this. This is where we're at going into today. Hold on. So this is where we're at. We were at going into today. You got a couple of things are trying to line up. Financials, healthcare, basic materials, industrials, right? You got a couple of things. Retail, that had a nice day today. So looking a lot better. Yeah, cyclicals. And, the cyclicals had a little rally and then they stalled. Look at it. We were talking about this, right? This is the major ExxonMobil, Chevron, but it's been the other ones that have been red hot. There's been night and day, some of the energy names. You got like the natural gas related names, AR, RRC, they went bananas. They went bananas. But you see, even there, you see what I like my point, and maybe it's just coincidence, but that's kind of the point I'm making. Like, instead of buying, the mega cap, the big cap name, the familiar name, the underbelly names are catching the more aggressive activity, and maybe because they have natural gas. They're involved in natural gas. Maybe that's the thing here, but I'm noticing that across the board in every sector. Yeah, that's where sweepers provide. Again, sweepers can give you an edge in the big names. I don't want to deter you guys from trading the big names, but yeah, you get to a point a lot of times where they're crowded. You know what I mean? They're crowded. There's so much action. There's so much flow. Like, you think about, right? When Apple's hot, right? When Apple really starts to heat up, right? You guys know, sweeper, right off the open, they go bananas, right? Like, and we're gonna try to make sense out of 2 Apple sweeps in the afternoon on whether it's a bet that can give us an edge in the stock. You know what I mean? Like, it's ridiculous to even think about it that way. So I'm just trying to get you guys to look at, the flow the right way and not misinterpret it for, you may want something else out of the sweeper activity that you're not going to get no matter what you think. Now Apple, like, for example, for me, the sweeper edge for Apple would be two ways. That the one I just mentioned, okay, off the open, boom, 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 boom. You got a day trade there. right? You could ride it, raise a stop, play weeklies, whatever your heart desires. But you know what you're looking for there. It's strictly a momentum short-term bet off not one sweep, an oozy effect of algo buying coming in. Okay, so that's one edge. The other edge is if we're in a correction or Apple's in a correction, and all of a sudden we see some guy firing in 6-month out calls into the weakness, building a position, right? Like you could see how that could be an edge. You could see how that algo buying can provide an edge for a day trade. But regular flow on a Wednesday, weeklies or whatever it may be that just get we see come in, they mean nothing. They can mean anything, right? They can mean anything. So that's the point. I'm not saying you can't ever get an edge in these names. You just gotta. This game's all about being patient and waiting for certain things. You gotta wait for the right spots there. You gotta wait for the right spots. But like I said, not to sound like a broken record, I think now, the edge is in these under the radar names. I'm not even gonna say under the radar names. I'm gonna say I like the word underbelly because that's what it is. The underbelly of the market. Yeah, and that's what would make a more normal market, Dan, without a doubt. It becomes a stock pickers market. Your average Joe out there just can't throw a dart and buy the same name as it goes up over and over and over again. You know what I mean? You get up and down days, and the names that catch the flow outperform. So, but I like that, Dan. You know what I mean? I like that. I like that type of market. I like that type of market, If that's why I say, and you guys raise a good question, what kind of pullback would I need to see to, really get aggressive? Because the action we're seeing is in the names that I like, and I like to get aggressive. But at the same time, these type of names, I like to play via equity anyway, because the options are thin. Even though you guys are killing it on some of these option plays, I haven't passed nothing. I would like to see Path catch some nice action. 4,100. I mean, we can't get that. You know what it is, Dan? I think too many people are want the pullback, right? We spoke about that. A lot of people are protected against a regular pullback and want a regular pullback. So it's either going to be like chop or boom, flash crash, right? Like it's got to be one or the other. It's got to be one or the other. Because and the pain, I think a lot of people have been feeling pain. I really do. Right? Ask anybody who's been in cyclicals and not growthy type names throughout the summer. They'll tell you we've been in a disaster of a correction. FVRR, how's that been? I haven't looked at that stock in ages. Yeah, doesn't look too shabby, right? Doesn't look too shabby. And we see the market, we complain we don't get pullbacks. You get pullbacks in these names. You get opportunities in these names. AVLR. That ended up going to new highs, right? It's almost like you knew it was going there. These are crazy, these names, man. Yeah, the indexes are tough now. They're tough. And it's not, again, trades. Crocs, what an animal. That's another thing we went through. Any stock that announced a buyback, Crocs announced another buyback. They just instantly moon. A PLTR, I like it, but I think it's a tough trip. You know what I mean? Like we were saying. So Carlos, I think there's going to be shakeouts. I think there's going to be shakeouts. And I think you try to buy the shakeouts. I think kind of like when snow started, you know what I mean? Like this. So every time people thought snow was just going to go, came right back down, shook them out, right? Rally, chop, pop, chop, pop, shake out, pop, chop, right? So it's like the chart doesn't even do it justice. It's a tough trip. Yeah, a lot of false moves. And I think PLTR is notorious for that. You know? You see, like, look at this. Right? We literally see action almost every day in PLTR. Every day they're slow. Every day. Yeah, it's not easy, Dan, unless you're right. You have the conviction and the patience, right? You got to have those two things. Otherwise, you get shaken out like this. I think, Moshe, you hit the nail on the head. That's why, exactly. That's why it's like that. That's why it's like that. You know, you had a lot of eyeballs. You had everybody and their mother bought this dip. Everybody right here. You know, everybody. So I think now the shakeouts, the names you like to shake out, you have to buy. That's what I think has changed. You know what I mean? Yeah, pretty much on. Unless it's a new name. You know what I mean? Unless it's fresh action, a new name that hasn't done anything. But you're right. That's pretty much what you look to do. And it's a lot different than the market, because the market, like, you know, this is the first shakeout. Like, these are shakeouts in this market. You know, one of these are going to fail eventually. One of these are going to fail. So, and it seems like every week there's something, right? You got like some sort of binary event every week. $19th of the month was marking the book. That's OPEX, Sardor. That's why. Options expiration. All this is options expiration here. All around options expiration. Mechanical, right? So now let's see, because, you know, they front ran this. Let's see. And I think here's my last prediction, just my gut. I think what's going to happen when it does fail, you're going to get this, right? And everyone's going to think right back to new highs, and then they catch them. You know what I mean? So I think the reason why I say that, I think for us, like, we could still trade off that bullish sentiment signal and catch a squeeze. But that's why, you know, and listen, I was wrong here because I said it there, but I would be a lot more careful on how much I'm looking for and get caught giving it back, because that's how it usually shakes out. You know, that's how it usually shakes out. And then the leg down, when it happens, the leg down, whenever that leg does end, there should be a decent entry there for on an intermediate term basis, you know, where individual names, there'll be nice winners coming out of that. Yeah, that's the difference. Hussein, that, you know, you hear even the Gamma Gang is surprised by it, right? With that MPD number. They're almost shocked by it because it's been a habit. You get this, they load up on SPX puts to hedge, and you get new highs. This time, they didn't do that. But there's a but. You have Fed week next week, and we may see it. The NPD is basically delta, right? So when you buy calls, that's positive delta, right? When you buy puts, net put delta, it's negative. So the higher the negative number, the more puts were bought. Okay, so if there was 0, that means out of that put action, it was mostly put selling. If it was negative 12, that means there was aggressive put hedging being opened. You understand? So that's how you want to see it. The higher the number, the more puts were bought. Right? And like, for example, let's say we see a minus 12 tomorrow, right? Off today's action. That would tell us that today, the put to call volume, whatever made up the put volume, was mostly bought. And the likelihood is we get a bounce from here. So I think yesterday, I think it was almost 0, right? If I'm not mistaken, almost. It was some 0 point, yeah. So let's call it 1, you know? So there was not much put buying. There was not much put buying. Right? So they can catch them. If they want to, they can catch them here without that much hedging on. But again, I don't want to jump the gun because you got the Fed next week, and we could come in Monday and see all sorts of protection. You got the Fed next week, and then you got the end of the quarter, which is probably worse than OPEC's. We're rebalancing. So you got, I mean, I don't know if I would say vacation time, because individual names and you got some volatility. That means we'll get some sentiment buy signals, Pete, you know? But I would stress, patience. Patience here. May turn out to be bullish because everyone gets concerned, but you want to see that first, You want to see that first. But there's good happening, right? We look at this, there's a lot of good happening. If we do get further weakness, you're going to have a lot of risk on sectors light up green. I mean, exactly, Ani. Even the anti-VIX, if you see some sweeper activity intraday, you could get some nice squeezes. So there's stuff to play. We just want to pay attention more. We want to pay attention more. All right, boys and girls, I ran out of saliva. I got to get a drink. All right. Yep. Take it easy, everybody. We'll see how OPEC's day tomorrow turns out. All right. But nothing really major. We'll see what the end net put delta number looks like. See if it helped us out a little. Good luck the rest of the week, guys. If I don't speak to some of you, enjoy the weekend. And we got Fed week next week. Be good, everybody.